While we are getting the stage set up, just wanted to let you know we have one more interesting session before lunch. And this is, we are very fortunate to have Undersecretary Nellie Liang with us. And she has been in the news a lot, and she has been deeply involved in stablecoin regulation and many other important policies at the Treasury. And also, Professor Chris Brummer, who is going to moderate this Fireside chat, is a chair professor at the Georgetown University. And it's very well known within the Fintech community. Actually, we all know him through his popular Fintech podcast and also DC Fintech event, which is one of the largest events in DC.
Well, thank you so very, very, very much. I guess we'll start. This is always an honor to talk to the great Nellie Liang about all things stable coins, and so also on behalf of Chris Brummer, thanks so much for coming over to Philadelphia. I think we'll start at first sort of a 10,000-foot question about the executive order. I guess that's been really occupying a lot of your time. And last March, President Biden had released that executive order regarding digital assets. Maybe just to kick off this conversation, you can give us a bit of an overview again on what that executive order meant and really where that work stands at this point.
Okay, so is this on? Okay, so first let me just say thank you for inviting me here, and thank you to Chris for moderating the session. President Harker and Lapa, thank you. I appreciate the opportunity to be here. So I will just step back and talk a little bit about the executive order. The president issued an executive order for the responsible development of digital assets in March, and it is a pretty broad, wide-ranging set of issues that he asked the government to look at. We are focused, and we spoke mostly about financial issues today. It is a bit broader than that. I would say in terms of objectives and principles, it includes not only economic growth and financial stability and investor and consumer protections, but also financial inclusion, privacy and national security, and global financial leadership. So Treasury is taking a leading role in developing quite a number of the reports responding to the executive order, but many other agencies are involved, and we are consulting with State Department and Commerce and the intelligence community, as well as all the financial regulators, and the National Academy of Sciences and the Office of Science and Technology. So it is a very broad-ranging thing. I highlight 5, maybe 6 reports. It sounds like there's a number of reports, but let me just highlight a few. First is, one is a financial stability report that will be written by the Financial Stability Oversight Council, a consortium of all the financial regulators. Another is the future of money and payments, including a consideration of central bank digital currency. Another is on consumer and investor protection issues, including potential risks for the more vulnerable communities. Another is on illicit finance risks. And then a 5th is on international coordination on many of the financial issues related to digital assets. Those are 5. There are a number of others, including the technology underlying the development of a CBDC, for example, that Treasury will be consulting on. So it is a broad range of principles that and objectives, policy objectives for the government to take with this new development and this new technology, which could, potentially be quite transformative.
Yeah, I find that project really ambitious and I think really interesting. I think sometimes people can underestimate just how difficult it is because on the one hand, you're not just researching what's happened in the past, but you're looking at what's happening now. And we heard in the last panel about some turbulence in the crypto markets. And that turbulence, as well as market movements, likely inform, how you think about crypto markets and many of the themes and the issues that you had just touched on. Again, while trying to execute this research and watching sort of the developments in the markets in real time, what are you seeing? What are you learning? What are you thinking about the financial risk or I should say the financial stability implications of crypto?
Okay, so thank you for that question. It's a fascinating question. It's one that we think about a lot. So let me just define financial stability just a little bit. So it is, in the scheme of financial stability, we don't think about just whether prices are going up and down, even if they go up and down a lot, right? But it's more about within the crypto ecosystem, are there features of the system that cause some shock to get amplified and even go up and down by more? So one of the panelists from the previous section talked about within the crypto system, the prices are going up and down, but it's really because there's leverage in the system. There's some funding mismatches in the system. There are a lot of interconnections in the system. Those are standard financial risks, but they just happen to be related to the crypto assets. So right now, in our view, the way we're seeing it, and as you said, we can look at what's happening now and what has happened, but we're trying to also look to the future. But for financial stability within the crypto system, we do see leverage, we do see funding mismatches, we see interconnections. They can all amplify an operational risk and really cause problems. We saw, the size of the decline in the market value has been pretty large. There's also how connected is it to the traditional financial system? And there we didn't see a lot of amplification to the traditional system. And that is in part, the traditional system is not as connected yet. It also, I would just say, doesn't mean we should always then not allow it to be connected. It's just if it becomes connected, it should be done in a way that ensures that it can be resilient to shocks such as this. So I guess for financial stability purposes, I would just kind of make that distinction of it's not just about whether prices are going up and down, but how does the system function? How is it, what are the features of the system that allows it to be resilient to shocks? Yeah.
Yeah, no, I love that answer. I've been nerding out because it's a rich answer. It's a nuanced answer, and I think it's a really important one, right? Because assets do go up and down, but what does this mean? How does it take place, and what does it mean for other pieces and tools and the machinery of the financial system and the traditional financial system? I think that's a really important one. And then how do you make policy for that when you think about risk and financial stability? As you move, obviously there are other agencies that are involved, but as the Treasury Department takes the lead in trying to coordinate that policy response, when you're moving from that question of volatility to, again, the question of the operation or the machinery of our financial markets, what kinds of things are you thinking about in terms of that policy response?
Right. So thanks. And thanks for saying that you liked a question that is an answer that is nerding out. But just so I think we have to start with fundamentals. And in the crypto space, I think we would all recognize there's potential, but there's also been a lot of products and services that have been developed over the last couple of years that may not prove to be so valuable over the long run. And there are certainly issues of investor protection, consumer protection, fraud. So I think at a baseline, you need to ensure that you can protect investors, consumers from fraud, theft, market manipulation, conflicts of interest. In terms of then other recommendations for the resilience of the system, I think there is a lot of work ongoing, and I can't front run where the FSOC will end up being here in terms of how do you address leverage, or how do you address the funding mismatches? And I also think it's useful to distinguish the types of crypto assets in this space. We all see these charts of going up to 3 trillion and now having come down to 1 trillion or so since last November, since last fall. But there's a lot of differentiation across those assets. And so you can't like treat them as one entity. So those are the areas that the regulators are working through to address. And I just put aside the illicit finance for now in terms of, which is a whole nother set of issues ongoing.
Yeah, before the pandemic, I can remember last time I went to the gym, and the guy would say, "Hey, Professor B, what do you think about crypto?" And I'm like, "There's a lot of different kinds of crypto, and having that nuance, it's helpful, Well, if we're going to move maybe into a little bit more specificity, when you look at the larger architecture of the sort of crypto system or universe, stable coins, we talked a lot about it in that last panel, and the performance of stable coins has obviously been very diverse, as is the architecture of stable coins. I mean, where is stable coins in your, you're at the center of the policy conversation when it comes to stable coins. Where are you right now? Where are you at when it comes to stable coins and how you're viewing the appropriate policy response?
Yeah, so thanks for that. I thought the last panel had a great conversation on stablecoins, and one, it illustrated also the wide diversity of views on it. As many may be aware, Treasury led a President's Working Group on Financial Markets report on stablecoins and issued it last November. And stablecoins, of all the crypto assets that one could have thought about starting with, was, in our view, sort of because it's functioning as a medium of exchange within the crypto space, was important that if it offered stable value, it should be stable. So the thing about stable coins is they offer to be kind of a unit of money in some sense, a unit of account, a store of value, to offer as a medium of exchange. And it wasn't obvious at the time, and it still may not be, what were the assets that were reserving, what were the reserve assets? Could it function as a payment mechanism? Are there operational risks? How is the storage and transfer of the stable coin? Could it be used? So there are a number of questions, and the objective of the paper initially was, are there financial regulations in place to ensure it could function as a payment mechanism? We determined at the time in November that there weren't, that there were certain risks. We identified risks. One was the investor run risk, which has to do with the quality of the reserve assets and disclosure. Another was the payment system risk. And then a third is money functions better when everyone is using the same thing. And so the potential for it to scale up because of network effects or something was something that we wanted to stay focused on. So where are we now? We generated a lot of conversation in Congress with this report. I think there was a general view that the risks that were identified were the right ones to focus on. That does not mean we all agree on what should be done about those risks. And as you can see, there's been a lot of reporting. Different committees in the House and Senate have been working on different ways to approach this. We've been very pleased and excited that they've been taking up the issues and very seriously considering what to do. We, of course, were providing technical support if asked. But other than that, I can't say how Congress would respond and on what timeline they will work. If you have the answer, I'd love to know.
Well, I just like to keep, things really interesting. I'll tell you afterwards. I just because I was going to go into that congressional question, but just to take a step back, I mean, even when you look at stable coins, And this is a bit of a question in terms of how you look at things from a technical matter. The stable coins are pretty diverse. They're pretty different. How they operate, whether or not they're algorithmic, or whether or not, as the last panel had mentioned, whether or not, they're drawing on a, currency in a vault. When you think about the regulatory or the legislative process, and we do have now rumors of a couple of stablecoin solutions to be released imminently. How much do those details matter, as a matter of policy? And do you have a sense that, from a legislative standpoint, that's something that should be, that the real technocrats usually get involved in on the executive end, or is this like a legislative issue? I mean, it seems like that the Treasury Department is at the center of trying to balance, again, the regulatory technocratic expectations on the one hand, and then coordinating with the legislative branch about really honing in on the most important features when it comes to stablecoins.
So I think the PWG report tried to look forward, thinking about stablecoins as used as payment in not just the cryptos world, but also potentially as in sort of payment for real goods and services in the commercial real world. If you want to do that and you're pegging to a currency, we want to ensure in those cases that it can function as it can be stable, it can function, it's a unit of currency. It's that one of the broad principles in the executive order was, and something that we believe in, is uniform currency. We do not want to go back to the days, as of the late 1800s, where banks are selling their own notes and everything's trading at different amounts. The benefits of a uniform currency are enormous, and that's something we want to preserve. So I think thinking about stablecoins from that perspective can sort of illustrate, sort of bring forth like a few common principles, core principles of, the reserve assets, one-to-one, high quality, and being able to function, so.
Yeah,
I don't know if that.
No. That's a great. I'd asked a similar question of Yoon Sung-shin from the Bank for International Settlements on the podcast, and he schooled me on the importance of the unit of account issue, even as a matter of payments policy. And the dumb lawyer was like, "Oh, okay, I need to pay a little bit more attention to that." But there is a lot of skepticism, of course, right, about whether or not stable coins could ever be used for payment beyond for cryptocurrency, as you just remarked. Or in the DeFi system for protocols. Skeptics would say, why would one ever want to give stablecoins any imprimatur of legitimacy as a potential payment mechanism? As the person at the heart of this conversation over the Treasury Department, what's your response?
So I think fostering responsible innovation is one of the core principles. Technology can advance in ways that we can't anticipate. So allowing for that while reducing any potential harms to investors and consumers has to be at the core. So it could turn out that stablecoins 5 or 10 years from now don't exist in any form that they look like now. And we don't know if the central bank the US and other central banks will put in place central bank digital currencies and how those could coexist. But one doesn't, at least I think, underlying principle of ensuring responsible innovation is to allow for some innovation. And so in that sense, so I think in terms of the stablecoin legislation, just to be clear, it is not about trying to bring in current stablecoin practices into the prudential system and closer to the banks. It's about imposing a regulatory framework that actually changes some of the practices, preserves its good features, but changes the bad features and brings it closer so that because the prudential supervision and regulatory framework can ensure that.
Yeah, it seems that part or one essential element of trying to design an optimal stablecoin system, by definition, involves some kind of assessment of our current payments system, right? And you got into a little bit into the back, into that last conversation, and there are, I think almost everyone in this room probably had their own view as to how efficient or optimal that system is. But what's your sense? I mean, how do you view that payment system? And then when you think about emerging technologies, whether or not it be crypto or stablecoins or anything else, how do you go about thinking about that, any potential value proposition?
Yeah. So our payment system has a lot of strengths. I mean, the volume is amazing. We have privacy, we have protections. I mean, those are important things. And but I think it's pretty incontroversial that our payments can be expensive. Now, it could turn out we like expensive payments because we like we like the bonuses, a frequent flyer and restaurants and that. It could be that we like that. But there's optionality was a word that was used, I think is something that's pretty important here. So I think there's clearly room for improvement. Now, blockchain and distributed ledger technology may not be the only ways to bring about improvements in the payment system. There's the real-time gross settlement, the Fed Now that will be introduced next year. Those can go a long way for if your goal is efficiency, to increase, make it faster and cheaper, that will get you a long way. But if there's this sort of separate set of technology innovations that can off the blockchain that will go along, you also want to kind of guide that along as well and allow it to move along. And if it goes that way, you also want to set up the arrangement. So I could see systems where you have more than one infrastructure.
Yeah, I've been thinking philosophically a little bit about that issue. One time I tweeted that the U.S. payment system reminded me a bit of like JFK, like the entire world goes there. But sometimes when you go, you're a little bit embarrassed about how slow things can move along. Even though it's the center of the global economy, right? It's like,
yeah.
But I wonder, and again, this goes back to sort of other important kinds of players. I mean, again, the last panel had asked about, whether or not real-time payments are important. I'd just like to add that I think that a lot of people live check to check in this country. And I think that having an efficient and fast way to move money, whatever rails, are important. And I think it should be remembered. I do think that there's also the question beyond just even crypto, or perhaps a part of the crypto conversation, I don't know, that's useful. And I think the Treasury Department has played a really interesting role in. And that's this question about technology and minority depository institutions, community banks. There have been some really big wins in the administration when it comes to those institutions. Where do they fit in a fintech conversation?
Yeah. So thanks for that. So many of you are aware the last couple of years there's been, as part of the recovery programs, there's been quite a bit of capital allocated to the CDFIs, the Community Development Financial Institutions, and MDIs. The amount of capital that will be put into these institutions over the next 5 to 10 years is really substantial relative to their current base. And it's been really exciting to see the capital structure, the structure of the investment put in, as well as like the technical assistance and the workshops on best practices to ensure that money is going to, be used the best way it can. This this is really exciting. There's been a team at Treasury who's done quite a bit of work on this. So where does fintech come in? So the goal, I think fintech also has this goal of financial inclusion. That's what the objective. So one could imagine they can work together, but they're coming from different places, and so they don't have to work together. They can work apart and both try to achieve. So fintech, I kind of think as providing, the ones I'm thinking about are providing consumer services, but in a little bit more unbundled way, perhaps, than with banks. And the way we've seen it develop over the years is they kind of partner with banks. I could imagine them partnering with the CDFIs and the MDIs as they are now. We obviously want to ensure, again, the same principle, the same issues, consumer protections. But I think there's just a lot of, there's definitely potential here. I'm pretty excited about the ability of those institutions to help with financial inclusion.
Very cool. So I have like 2 minutes left for like 2 questions. So, and we can, if necessary, just maybe have the gentleman here.
Hi. So thank you so much for your comments. One of the things that doesn't get discussed a lot is stable coins. If they were to become extremely large, they're primarily secured by short-term Treasury securities. What do you think that would do to the Treasury securities market, and are there risks that we don't see when we think about that?
Yeah. So I think most stable coins, the recommendations in the PWG and a lot of the conversations is how close to cash or Treasury bills could you have in the reserve assets? I do think it raises some questions about disintermediation in periods of stress that one needs to really consider. The idea of in stress that you run to stable coins is something you don't want the current banking system or financial intermediaries to be disintermediated. I think that's a critical question for CBDC as well. So it's not unique to stable coins, but this is how one provides the whole system is an important question, but disintermediation is really an issue. I think if you do not, you can reduce the risk of stable coins by limiting to cash or Treasury bills or something very high quality, which does raise that run risk. But if it's connected to the banking system in some way or the prudentially regulated system in some way, then it may not flow as much out of that system. But those are trade-offs. And as I mentioned earlier, we may all agree on what the risks are and what our principles are, but how to solve for them, people will come to different solutions.
Okay, if someone can get the question very quickly, then we'll end. Sure.
Linda?
Hi, Nellie.
Yeah.
So, quick question. MiCA, the political agreement was made just recently. How does Treasury view MiCA? What are your concerns, if any? And what will be the main challenges in terms of harmonization with the EU?
So as I understand it, they still have to vote on it, correct? It's not quite finalized, and they're working through some of the, more technical issues with the broad principles. I mean, I think this falls, the U.S. has been working with the other countries, especially through G7, on digital assets and basic principles. In general, it adheres to the core principles of the G7 on digital assets. So, but every jurisdiction is going to have their approach to how they can deploy their regulations around digital assets. So, I don't want to speak to specifics, but I think in general it adheres to the underlying principles.
Okay, with that, I am also getting the stop sign. It is always, always a pleasure to talk to the great Nellie Liang.
Thank you so much, Chris. And thank you.